and welcome to Startup Street. I'm Arundhati Ramnan, and with me from the Bangalore studio is Ritu Singh. These are the top headlines from the startup world. PhonePe's investors paid 8,000 crore rupees in taxes to shift domicile from Singapore to India, says CEO Samir Nigam. Also adds at least 20 existing unicorns want to shift domicile to India if regulations get easier.
Google and Twitter-backed ShareChat's co-founders Fareed Ehsan and Bhanu Pratap Singh stepped down from executive roles at the firm. This comes a week after firing close to 600 employees. Both the co-founders will continue to remain on the social media company's board.
Riggy, a content monetization platform, raises 100 crore rupees led by Elevation Capital with participation from Axel, Stellaris, Sequoia, Mahendra Singh Dhoni, Kunal Shah, among other angels.
Studio Sira, a next-generation game studio which builds unique Indian-themed games, raises $2.6 million in pre-Series A round led by Kalari Capital and its seed investor Lumikai. The company plans to utilize the funds to globally launch its flagship gaming title, Kurukshetra Ascension, later this year.
Microsoft warns of slower growth in the coming months despite beating estimates in the December quarter. Satya Nadella says new business growth is slowing as customers are looking to save money.
The United States Justice Department, along with 8 states, sue Google for allegedly harming competition and abusing its dominant position in the online advertising market, seeks to force Google to break up part of its business. Google terms the allegations unfounded and vows to fight back. Now, those were the headlines that we're tracking for you today on Startup Street. But in our ongoing budget series here today, we're going to be putting the spotlight on India's fast-growing fintech sector. India is home to more than 2,000 fintech startups with more than 20 unicorns in this space. The industry's market size was estimated at $50 billion in 2021 and is projected to touch $150 billion by 2025. They're increasingly assuming an important role in the economy, reaching the yet unbanked customers with payments, insurance, lending and other activities. To talk about the sector's wish list from the budget and the role it can play to boost the digital economy, joining me now are Anand Kumar Bajaj, the founder, MD and CEO of Pay Nearby, and Deepak Jain, the co-founder at Flexi Loans. Deepak and Anand, both of you, thank you very much for being with us here on Startup Street. Deepak, I'll start with you. You know, we saw lots of announcements in the previous budget when it comes to the fintech sector, some tax reliefs as well extended for, startups which are incorporated till March of 2023. What is your general expectation this time around?
Thanks, Ritu, for having us here. So this time, given this is the last budget before the elections, we expect a very development-focused budget. So I would see government spending a lot on developmental efforts or infrastructure related. From startups perspective, and especially from fintech startups perspective, we see some steps taken to bring more global capital, not only in the form of equity but also in the debt form, and government open towards those areas. So I expect some steps been taken towards that piece. Second is to keep the whole fiscal deficit under control as a percentage of GDP. Government may again come with some ideas towards that. Not towards startups, but I also expect the whole divestment program which government has started to continue in this budget as well. So that will be another thing which we should all look forward for.
Okay, so our Deepak, our focus is very much fintech startups. So Anand, let me ask you specifically on that. 3 things that top your wish list from this budget.
Thank you, Ritu. Very simply put, like infrastructure companies were given 150% weighted tax benefit for building up infra in deep rural. I believe fintechs have done that same thing for reaching financial services to the masses in the deep rural. And since our costs are mostly variable and revenue in nature, the government may consider giving us 150% weighted tax benefit on the entire expenditure rather than just the capital expenditure. The fact what you said is that credit, content and commerce will all go well if the digital payment rails are established properly in the deep rural, which is what we as Pay Nearby and the banking correspondent industry has done. So it would be appropriate to seek request the government to consider giving 150% weighted tax benefit on all the expenditures done by the banking correspondent companies for financial services. One. The second, there is a 18% GST on the banking correspondent services. We would most humbly request that the government makes it 5% so that the model becomes little viable, be it ₹1.50 or 2 per transaction is saved, but to be able to take out services to the deep rural, my belief is that a minor exemption on the GST will go a long way. And third, since you asked, I believe that women are the GDP reserve of a nation, and all the self-help group and the microfinance companies working on lending small tickets of 50,000, 70,000 to the women members of the society, the companies doing such loans should be eligible for a refinancing at a lower rate. It would take the country to the next level, I believe.
Okay, Deepak, let me come back to you because as an MSME lender, and MSME has very much been the focus of the government the last few budgets, what would you like to see in terms of policy support from the government to further boost credit to this sector? And have the past measures like the credit guarantee scheme, etc., really worked?
Yeah. So coming specific to MSME, backed efforts, see, 67% of the loans for fintechs like us are in tier 2, tier 3 towns, and we are making a massive impact on those smaller and micro SMEs. So, but however, the scope of the guarantee programs, which comes from from this like the institutions like SIDBI, etc., or Mudra, etc., schemes, needs to be widened significantly. We would want some sort of additional coverage towards MSME lending, so that fintechs or NBFCs like us can go out wider and do more coverage there. Similarly, the insurance program of Mudra again needs to be slightly increased so that we can go out and take to the unserved and underserved market and go out and do more with the government there. Third, historically government has come out with subsidies or schemes where the cost of borrowing for fintechs and NBFCs can go down as well. Again, that will go a long way for us to go out and lend money cheaper to these MSMEs and help them create a massive impact on the GDP of the country. So I would ask steps towards these 3 points.
All right, and Anand, you have the final word then, because digital payments has been very much the shining star of India's fintech story, a focus area for the government as well. What next? What is going to help accelerate the digital story and enhance the payment infrastructure? And also, always there's that sticking point of who's going to bear the burden of the cost of, free UPI for citizens. Are you expecting any guidance on that front either?
I sincerely believe the government has done a good work and given a guidance by way of enhanced subsidy of 2,600 crore this year, in contrast to the 1,200, 1,300 crore last year. And clearly it is recognized that there is a cost which is required to be refurbished, and government has done that. We believe that this will help grow on one hand. And then there are work that companies like us are working in deep rural as a distribution as a service, DAS to the nation, as we call ourselves, to be able to take the high end of technology to the bottom of the pyramid. It is important that what is happening and available in the urban center should be digitized, sachetized and universalized to the mass market, to the tech oblivious segment. And this is a daunting task, a long-term task, and any support from the government in this would be a great gesture and enabler.
Okay, so digitize, sachetize and universalize. Anand, very well put. Thank you both of you for your time, Deepak and Anand, for being with us here on Startup Street.
Thank you.
Thank you.
On that note, it is time for us to head into a short break. But coming up on the other side, we put the spotlight on EV startups' key expectations from the 2023 budget. Stay tuned for that. Welcome back. You're still with us on Startup Street. Now, India's electric vehicle industry is rapidly picking up pace, and more people are embracing the adoption of clean mobility options for their daily commute. And with the rapid growth of new age mobility solutions like shared mobility and delivery-specific EVs, further impetus is given to the auto industry as a whole. Now, according to a report by Bain & Company, EVs will become a $100 billion opportunity in India by 2030. The Union Budget 2022 was a step in the right direction in introducing forward-looking policies to accelerate EV adoption. So what does the industry want from the current budget? We are now joined by Saurav Kumar, founder and CEO of Euler Motors, and Pulkit Khurana, the co-founder of Battery Smart. Gentlemen, thank you so much for joining me on the show today. Saurav, let me start by asking you, like I said, the electric vehicle industry has been rapidly picking up pace in India with several market overhauls such as increased manufacturing hubs and improved charging infra, but there's still a whole way to go. So take me through your top 3 budget asks from the government.
So thanks for having me on the show. Before we talk about what are the asks, I quickly wanted to say that government has done a phenomenal job over the last couple of years in sort of promoting the electric vehicle and the policies, whether at the center level, at the state level. If I quickly talk about my top ask, there are a couple of things. One would be so you had production-linked incentives, PLI schemes that government has announced for basically bigger companies to manufacture and accelerate manufacturing of electric vehicles in India. So there we wanted that startups should also be included in that list because some of these criteria very, very high for even like matured startup like us to be a part of it. The second thing is like, if that is a bit onerous, the second thing would be, let's just say we are at a stage where our product is one of the best in the market. We want to make thousands of them every month. We want to set up factories for it. So all the capex that we are doing, whether in factories or in R&D, if there is a way that we can get preferential access to that capex, right? That will help us accelerate that journey. And that goes along in the overall theme of accelerating the electric vehicle adoption in the country.
Right.
Second thing is about inverted duty structure. So today, if you talk about like, let's just say electric vehicle, when I'm selling it at 5%. But if I'm buying raw materials to manufacture it, it is coming at like 5%, 18%, 28%. And then I accumulate a lot of GST with every thousands of vehicle that I'm going to make. How do I reclaim that back? If that process can become a bit better, that will be good for the startups and everyone involved in the process in general. Third one is around your FAME 2 subsidy, I think, which was my first point. The government has done a phenomenal job over there.
Absolutely.
If they can continue, because this is slated to sort of end at the 31st of March of this financial year. If they can sort of continue this, because this has definitely accelerated things on the ground, but not a lot of utilization has happened, especially in segment like commercial vehicle where we have been building a vehicle.
And we're going to talk about that in detail in just a bit. But Pulkit, let me bring you into the conversation. The government has released the draft battery swapping policy, and this was also alluded to in the 2022 budget. How beneficial is this, and where are we on this front? And what are your top budget asks from the government, if you could quickly tell us?
Thanks, Arundhati, for having us. Of course, it was very heartening to see that a battery swapping policy was announced on the floor of Parliament last year. Although it has not yet been notified. So that is definitely one of the asks, that if the battery swapping policy could come into force as soon as possible and finalized, the industry is waiting for it. The other ask is obviously very related to that policy, which is around bringing swapping under the umbrella of FAME subsidies. There is also talk around extending the FAME subsidy, but currently swapping is not at a level playing field with fixed batteries, because the vehicle with fixed batteries get subsidy, while those with swapping, if bought separately, there are neither subsidies on the vehicle nor on the battery.
Right.
So that has been a prayer from the industry to kind of bring swapping also under the umbrella of subsidy for a level playing field between fixed battery products and swapping products. And the last is very related to something that Saurav also alluded to. The batteries itself is at 18% GST. Someone who bought a EV, say, 3 years ago and is now going to replace his battery would end up paying 18% GST on that battery, even as a consumer. While the EV is billed at 5% and there is a parity required, I think this was more of an oversight which needs to be corrected. It has been time and again been acknowledged by various government officials that it should be at 5% for batteries. We're just hoping that this gets announced in the budget speech, and maybe the next GST council would then take action.
All right. If you could tell us, the FAME scheme, like you mentioned, gave a much-needed boost to the EV sector. However, it expires on March 31st, 2024 and needs to be extended. Now, will the extension of this scheme be beneficial? What would you need on the regulatory front in terms of the FAME scheme?
I mean, definitely like FAME 2, both FAME 1, FAME 2 has definitely accelerated. And there is no doubt about that. If you look at the penetration of EVs in any segment, whether it's two-wheeler, three-wheeler, commercial, passenger, everywhere, like your FAME has definitely sort of accelerated that journey. We would definitely want this to be continued. I mean, in form and shapes that government can obviously decide whether, like, if let's just say a certain segment reaches a percentage threshold of adoption, they can decide to reduce percentage, they can decide to discontinue. But at least for the next coming couple of years, I think we would want this continuation to happen. In terms of, I think, your second question around the compliance regulatory piece, there, I think government is what we have seen also as an OEM that they have been sort of strengthening the localization piece as they are going forward. And a lot of those pieces are also around performance and Indianized. So that I think is on the right track. I mean, that needs to be done. Because at the end of the day, it's a taxpayer money. And if you are not building things here in India and not building the right form factor of vehicle, then it's not. So we are in support of that.
All right. And Pulkit, if you could quickly tell us, what's your view on the PLI scheme? What do you think will help make the PLI scheme a game changer? What needs to be done on that front, if you could quickly tell us?
I think the PLI scheme is definitely in itself a game changer. India as a country needs to start producing cells for these batteries. Currently, we are 100% reliant on imported cells for all the batteries, and thus our entire EV journey as a nation is dependent on other nations. So PLI scheme would give that required boost to localize the production of cells, which is the key component for any EV battery itself. We have been hearing that government is also securing raw material required for these cells in terms of lithium, manganese, cobalt, and so on. And hopefully that would help. It is still going to take another 2 years before we'll see meaningful production happening. But maybe government can aid joint ventures and other initiatives, give certain incentives there on land acquisition, etc., so that this production really starts fast. That's something we are hoping for. It will solve our supply problems by that time.
All right, Saurabh, Pulkit, thank you so much for joining us on the show. We're completely out of time, but let's see what comes out of the budget 2023.
Yeah, thanks, Arundhati.
All right. Thank you, Arundhati, for taking us through that conversation. Now, India's plastic waste accumulation is projected to jump 10 times by 2030, rising to 217 million tons, driven by packaging materials, says a new report by Harsh Mariwala-founded Marico Innovation Foundation, which has estimated these figures. Now, while the conversation around plastic waste has been ongoing, today we're going to put the spotlight on two change makers who are building world-first solutions to solve for single-use plastic waste. Aishwarya Anand brings you this report.
Plastic consumption in India has grown significantly over the past 5 years, and so has its waste output. Approximately 3.4 million tons of plastic waste was generated in India in FY20, as per a recent report by Marico Innovation Foundation in partnership with Indian Institute of Science and Praxis Global Alliance. Another concerning fact is that while India produces 3.4 million tons of plastic waste in a year, only 30% of it is recycled, which means that 3/4 of India's plastic waste ends up in landfills and aquatic dumps. To combat the challenges that are associated with plastic waste, new age entrepreneurs are now using cutting-edge technology to build a more sustainable future. Pune-based startup Patcare Labs has developed a smokeless and odorless sanitary waste management system.
Single sanitary napkin takes 500 to 800 years to decompose, and India generates almost 1,200 crores of sanitary napkins every year by 121 million of the women. So at the Patcare Labs, we are solving majorly 3 problems. First major problem is disposal of sanitary waste, sanitary napkins at source on individual washroom level. Second problem is more about the handling of this kind of hazardous waste by our sanitation workers, our rag pickers. And third, unfortunately, All this kind of sanitary napkins, diapers contains absorbent hygiene products, contain pulp, plastic and the super absorbent polymer. How we are doing this? We have developed this world's first 5D technology which works on a chemomechanical principle, where 5Ds are disinfection, deodorization, decolorization, disintegration and deactivation. So pick up this material from the different client location, from the sanitary waste bins. We pick up this material, we bring this material to our nearest material recovery facility where all this our patented 5D process happen. We extract the pulp and the plastic out of it from these used parts, post-consumer parts, where plastic can convert into granules, and the pulp we again converting into the different application in chemical, paper and packaging industry. We are already in more than 6 cities, serving more than 244 clients, including Procter & Gamble, Tech Mahindra, JLL, Goldman Sachs, Capgemini, and many more. We are impacting more than 1 million women on daily basis while creating impact and positive impact on more than 100 plus waste speakers. And throughout this initiative, we are recycling and recovering 4 metric tons of sanitary napkins per month that conserves almost 20 metric tons of carbon equivalent.
Packaging products like PET bottles, grocery bags and single-use food wrappings contributed to the largest proportion of plastic waste at 2.3 million tons in 2019 to 20. Infinity Box is replacing single-use plastic containers with reusable, recyclable and better quality containers.
Swiggy and Zomato have grown exponentially over the years. Today they serve about 4.5 to 5 million orders a day, right? So of course we used to order in, and then these containers used to be disposed. Almost all the single-use plastic containers that are used today, they're disposed or landfilled or burnt. 75% of Indians like food ordered is curries. So the only packaging material that can cater to that is plastic. But if you reuse it, you're actually preventing a lot of carbon footprint. What we say is that we will give you a Tupperware quality container, we will collect it back from your house, but then we will reuse that container 40 times, 100 times, 200 times. And that is how we will prevent new material from being produced. We are doing that with Swiggy. We are also in talks with other players. We do that for some of the largest corporates in the country like Narayana Hospitals. We do that with Wipro and many, right? IIT Bombay is also a new client. And the only reason we are able to do all of this at scale is because of technology. We have our own in-house technology team which has developed different tracing technologies, our own applications, our own web servers, etc., which allow us to track every single container use and maximize it. We easily do more than 10,000 odd pieces a day. So we have 2 facilities in Bangalore or in Bombay, and combined we would do at least 15,000 pieces a day of different types of containers, paper cups, plates, cutlery, and we replace all of that with reusable containers every single day.
While there are many innovators impacting the society, the Marico Innovation Foundation has shortlisted 15 such promising startups in its flagship Scale-Up program that is focused on possibilities and innovation around plastic waste, where they are going to nurture these change makers and help them in their scale-up journey. With camera person Saurabh Chauhan, Aishwarya Anand for CNBC-TV18.
And with that, it is a wrap on this edition of Startup Street. More news and updates coming up on the other side. Stay tuned.